Hey there, welcome back. Today, we're going to take a deep dive into this Motley Fool article that caught my eye. It's about Palo Alto Networks and whether they might be an unstoppable investment opportunity going into 2025. The article's titled, One Unstoppable Stock Split Stock to Buy Hand Over Fist Heading into 2025. And it was published just a few days ago on November 27, 2024. What intrigued me was the stock split thing they're doing and how the article ties that into AI and cybersecurity.
Sounds like a lot to unpack.
It is. So let's start with Palo Alto Networks himself. The article points out they're the world's largest cybersecurity company with a market cap of $130 billion. So not exactly a small operation. They had a 3-for-1 stock split back in September 2022. And since then, their stock price has gone up 112%. Now they've announced another split, a 2-for-1, happening on December 16th. I'm curious, what's the big deal with a stock split? What does it actually mean for someone thinking about investing?
That's a great question. Something a lot of people wonder about. Think of a stock split like slicing a pizza. You cut a pizza into more slices. You still have the same amount of pizza overall.
Yeah, right. Yeah, you just have smaller pieces.
Exactly. A stock split works similarly. A company increases the number of shares available, but each share represents a smaller portion of ownership. Let's say a company announces a 10-for-1 split. If you owned 1 share before the split, you'd now have 10 shares. But the price of each share would be 1/10 of what it was before. So while a stock split doesn't inherently increase the value of a company, it can make the stock more appealing to individual investors who might have been hesitant to buy at a higher price.
So it's more about accessibility and perception than instant riches.
Precisely. Sometimes a stock split is seen as a sign that the company is confident in its future growth, which can further attract investors. Now, getting back to Palo Alto Networks, the Motley Fool article calls them unstoppable. What do you think? Are they living up to that hype?
Well, they do operate these 3 massive cybersecurity platforms: cloud security, security operations, and network security, each with its own array of products. What really catches my attention is how they're integrating artificial intelligence. They're using AI to automate everything from threat detection to incident response. AI is almost becoming essential in this fight, wouldn't you say?
Absolutely. As our world becomes increasingly digital, the threats are evolving at an alarming pace. Relying solely on human-led processes is simply not enough anymore. Palo Alto Networks is leveraging AI to help companies automate their security operations and drastically improve their response times. The article highlights this compelling case study: a healthcare company that adopted Palo Alto Networks' Cortex XAM platform. They went from resolving only 10% of incidents with automation to 90%. That's a huge leap in efficiency.
Wow, yeah. It really shows how AI can transform cybersecurity, and not only by increasing efficiency, but also by freeing up human analysts to focus on more complex tasks. It's fascinating, but it's also a little unnerving to think about how much we're relying on AI for security.
That's a valid point. It does raise questions about the potential risks and unintended consequences of AI in cybersecurity, which is something we can delve into later. Yeah. But for now, let's focus on Palo Alto Networks' approach. What's especially intriguing is their Secure AI by Design product line. What are your thoughts on that?
It seems incredibly forward-thinking. We're seeing so many companies using third-party AI models, from companies like OpenAI or Anthropic, to build their applications. But when you're feeding your data into these external models, it raises concerns about data leaks or breaches. Secure AI by Design aims to mitigate those risks, essentially protecting the data that's being used to train and run AI applications. The fact that they've already secured over 750 AI applications speaks volumes about their leadership in this space.
It's a testament to their proactive approach. They're not just reacting to current threats, they're anticipating future ones. Now, all of this innovation is exciting, but what about the numbers? Is Palo Alto Networks delivering the financial performance? To justify this unstoppable label, the article mentions strong revenue growth and a focus on something called platformization. Can you elaborate on that?
Well, their recent quarterly report shows they brought in $2.1 billion in revenue, a 14% increase compared to last year. And what's even more encouraging is that this growth is accelerating. Their previous quarter saw a 12% increase, so they're clearly on an upward trajectory. But I'm a little fuzzy on this platformization concept. What exactly does that entail?
It's a strategic approach where a company aims to become the sole provider for all their clients' cybersecurity needs. Think of it as a one-stop shop for everything security-related. Instead of piecing together solutions from various vendors, companies can rely on one comprehensive platform from a single provider. This simplifies security management, streamlines operations, and potentially makes their overall security posture more effective.
That makes sense. But how does platformization tie into Palo Alto Networks' recent growth? The article mentioned a bit of a slowdown followed by a recent pickup. What was that about?
You've hit on a key point. When they initially started pushing this platformization strategy, they offered customers some pretty attractive deals, like fee-free periods, to encourage them to consolidate their security solutions under the Palo Alto Networks umbrella. This move initially caused a slight dip in revenue growth, as they were essentially investing in acquiring these platform customers.
So it was a short-term hit for a potential long-term gain.
Exactly. And that investment seemed to be paying off. Remember that 14% revenue growth we talked about? A significant driver of that growth is their next-generation security products, which include their AI-powered solutions. These products saw a remarkable 40% year-over-year increase in annual recurring revenue, bringing in a whopping $4.5 billion. And what's even more interesting is that over half of that revenue comes from those platform customers they've worked so hard to acquire.
Okay, so we've got a stock split, seemingly strong financial performance, forward-thinking AI integration, and this platformization strategy that seems to be gaining traction. But how does Palo Alto Networks measure up against the competition? The article mentioned CrowdStrike as their main rival.
That's right. And it suggests that, based on a common valuation metric called the price-to-sales ratio, Palo Alto Networks might actually be undervalued compared to CrowdStrike. What are your initial thoughts on that?
Well, I'm always interested when a company might be flying under the radar, especially in a hot market like cybersecurity. Can you unpack this valuation comparison for me?
Certainly. Palo Alto Networks currently has a price-to-sales ratio of 16.4, while CrowdStrike sits at 26.3. That's a pretty significant difference, suggesting you might get more value for your investment with Palo Alto Networks. However, it's essential to acknowledge that CrowdStrike consistently boasts a higher revenue growth rate, often exceeding 30% each quarter. That level of growth warrants a higher valuation to some extent.
But doesn't Palo Alto Networks have some advantages in terms of scale?
Absolutely. Remember that impressive $4.5 billion in annual recurring revenue they're generating from next-generation security products alone. That surpasses CrowdStrike's total annual recurring revenue, which stands at $3.8 billion. So while CrowdStrike may be growing at a faster rate, Palo Alto Networks is already a larger player in this specific segment.
And it sounds like they're not slowing down. They've set an ambitious goal of tripling their platformization customers by 2030.
It's a bold move, but if they achieve it, their annual recurring revenue from next-generation security products could reach a staggering $15 billion, based on their current valuation. Hitting that $15 billion mark could potentially double their stock price.
Wow, double! Okay, now that's something to consider. So from what we've discussed so far, Palo Alto Networks seems to be a formidable force in cybersecurity. They're not only riding the wave of industry trends like cloud computing and AI, they're actively shaping them. But before we get ahead of ourselves, I think it's important to take a closer look at the risks involved. No investment is without its downsides, right?
You're absolutely right. There are definitely risks to consider, and we'll dive into those in the next part of our deep dive. Stay tuned. Welcome back. I'm glad we're picking up this conversation about Palo Alto Networks because, as you rightly pointed out, every investment comes with risks. Cybersecurity especially is such a dynamic field. What do you see as some of the most significant risks for investors to consider with this company?
Well, the competition is fierce, right? We talked about CrowdStrike, but there are also giants like Cisco, Fortinet, and Checkpoint Software Technologies, not to mention all the new startups, trying to disrupt the market. It feels like a constant technological arms race.
That's a great observation. Staying ahead of the competition is crucial in this industry. And Palo Alto Networks can't afford to become complacent. They need to continuously innovate and adapt to maintain their edge. What else worries you?
Honestly, the rapid pace of technological change is a little daunting. What's cutting edge today could easily be obsolete tomorrow, especially in a field like AI, where things are evolving so quickly. What if their AI-powered solutions fall behind? Wouldn't that impact their market share and future growth?
Absolutely. Palo Alto Networks needs to ensure their technology remains at the forefront, constantly learning and adapting to stay ahead of emerging threats. This requires ongoing investment in research and development, which can be costly and unpredictable. They can't afford to fall behind in this technology race. Are there any other risks that come to mind?
Well, cybersecurity is all about trust, right? Companies are entrusting Palo Alto Networks with their most sensitive data and systems. Any breach of that trust, like a major security lapse or a data leak involving their products, could be disastrous. Their reputation is on the line every single day.
You've hit on a critical point. A major incident could severely damage their reputation and lead to a loss of customers. Rebuilding trust in the cybersecurity world is a long and difficult process, What are your thoughts on how they're handling this challenge?
Well, they seem to be aware of the responsibility they carry. They've been vocal about their commitment to security and transparency. But it's a constant balancing act, isn't it? They need to innovate and push boundaries while also maintaining the highest levels of security and customer trust. It's a tightrope walk.
Indeed. And it's not just about preventing breaches, it's also about having a robust response plan in place. How do you think they're doing on that front?
Well, they seem to have a solid team of experts, ready to respond if an incident does occur. A swift and transparent response can go a long way in preserving customer confidence. But beyond the immediate response, there are other factors to consider, right? Like the regulatory landscape, which seems to be constantly shifting in cybersecurity. What are your thoughts on that?
That's another crucial point. Governments around the world are increasingly concerned about data privacy and security, and they're implementing new regulations all the time. Palo Alto Networks needs to stay on top of these changes and ensure their products and services comply with all applicable laws and standards. Any misstep could result in fines, legal challenges, and reputational damage, potentially limiting their ability to operate in certain markets.
It's a complex web to navigate, and then there's the overall economic climate to consider. Cybersecurity is often seen as a necessity, but in times of economic uncertainty, companies might be tempted to cut back on their security budgets, right? How might that impact Palo Alto Networks?
That's a valid concern. While cybersecurity is essential, it can be a significant expense, and companies may prioritize other areas. If they're facing financial pressure, this could potentially impact Palo Alto Networks sales and revenue growth. So keeping an eye on macroeconomic trends and how they influence cybersecurity spending is crucial. But with all these risks laid out, I'm curious, what are your overall impressions?
Honestly, I'm still intrigued by Palo Alto Networks. While the risks are real, they seem to be aware of them and are taking steps to mitigate them. Their focus on innovation, their strong financial performance, and their commitment to staying ahead of the curve are all positive signs. However, one thing that always makes me a little nervous is valuation. How do we know if a company is really worth investing in, even if it operates in a promising industry like cybersecurity?
That's an excellent question, and it's something that every investor grapples with. Determining a company's true worth is a bit of an art and a science. There are various valuation methods, each with its strengths and weaknesses. Have you ever encountered these methods?
I've heard of things like price-to-earnings ratios and discounted cash flow analysis, but I'll admit those can seem a bit intimidating. For someone who's not a financial expert, what's the gist of these methods?
The basic idea is to assess a company's intrinsic value based on its financial performance, its assets, and its future growth prospects. Essentially, you're trying to determine what the company is really worth, independent of the current market hype or sentiment. Then you compare that intrinsic value to the current market price to see if there's a discrepancy. What do you think happens when there's a discrepancy?
Well, if the market price is significantly lower than the intrinsic value, it could be a good buying opportunity because the market might be undervaluing the company's true worth. But if the market price is much higher, it could be a warning sign, right? It might suggest that the market is overly optimistic and the stock price is inflated. What do you make of Palo Alto Networks in terms of valuation? We've discussed their price-to-sales ratio compared to CrowdStrike, but are there other metrics worth considering?
Absolutely. One common metric is the price-to-earnings ratio, or PE ratio, which tells you how much investors are willing to pay for each dollar of earnings. A higher PE ratio usually indicates greater optimism about a company's future growth. What are your thoughts on high PE ratios?
I guess a higher PD ratio would make me a bit cautious. But I also understand that high-growth companies, especially in tech, often have higher PE ratios because investors are excited about their potential. What about Palo Alto Networks' PE ratio? How does it compare?
Their PE ratio is currently higher than the industry average, but it's in line with other high-growth cybersecurity companies. So while it's something to be aware of, it doesn't necessarily raise any immediate red flags. It's all about considering the context and comparing their valuation to their peers and their own historical performance. Does that make sense?
Yeah, it does. So we've looked at the PE ratio. Are there any other valuation metrics that might give us a better picture of Palo Alto Networks?
Another helpful metric, especially for high-growth companies, is the price-to-sales ratio, or PS ratio, which we touched on earlier when comparing them to CrowdStrike. This ratio compares the company's market capitalization to its annual revenue, giving you an idea of how much investors are willing to pay for each dollar of sales. What does this tell you about investor sentiment?
It seems like similar to the PE ratio. A higher PS ratio would suggest that investors are more optimistic. About the company's future growth prospects, are there any other metrics we should look at?
The price-to-book ratio, or PB ratio, can also be insightful. It compares a company's market capitalization to its book value, which is basically the value of its assets minus its liabilities. This ratio gives you a sense of how much the market is valuing the company relative to its underlying assets. Have you ever used this metric?
Honestly, I haven't delved too deeply into PB ratios. What should I be looking for?
A PB ratio of 1 means the market is valuing the company at its book value. A higher PB ratio suggests the market is placing a premium on the company's future earnings, potential, and intangible assets, like brand recognition and intellectual property. Conversely, a lower PB ratio might indicate that the market is undervaluing the company's assets or is concerned about its future prospects. How does Palo Alto Networks' PB ratio stack up?
Well, according to the research we have, their PB ratio is currently above the industry average. But again, that's not unusual for high-growth tech companies. It seems like we're seeing a pattern here. They're trading at a premium compared to the broader market. But it's not necessarily out of line with their peers and their growth potential. What's your take on that?
I agree. Their valuation metrics suggest that the market is optimistic about their future prospects. But it's essential to remember that valuation is just one piece of the puzzle. It's not the be-all and end-all of investment decisions. You need to consider a whole range of factors, including the company's financial performance, the strength of their management team, the competitive landscape, and the overall industry trends. What stands out to you the most?
I think the management team is incredibly important. They're the ones steering the ship. And in a fast-paced industry like cybersecurity, a strong leadership team can make all the difference. What can you tell me about the people at the helm of Palo Alto Networks?
That's a crucial point. Their current CEO, Nikesh Arora, has been leading the company since 2018, and he brings a wealth of experience from his previous roles as president of SoftBank Group Corp and as senior vice president at Google. Do those credentials impress you?
They certainly do. That kind of experience at the highest levels of the tech world must be invaluable in navigating the complexities of the cybersecurity market. What about the rest of the team?
The rest of the executive team is also composed of seasoned professionals with deep expertise in cybersecurity, technology, and business management. So it's not just about individual qualifications. It's also about their collective vision and how they work together as a team. What do you think makes a successful leadership team?
From my perspective, a successful leadership team is one that has a shared vision for the company's future, a deep understanding of the industry they operate in, and the ability to adapt and respond to change effectively. They also need to be able to inspire and motivate their employees. What's your take on Palo Alto Networks' management team in that context?
Based on their track record, they seem to be doing well on all those fronts. They've successfully grown the company, expanded into new markets, innovated with new products and services, and proactively addressed challenges, like the shift to platformization and the integration of AI. But even the best management teams can stumble. What are your thoughts on that?
Well, no one is perfect, and unexpected challenges can always arise. But I think it's reassuring to see a team with the experience, vision, and a track record of success. That inspires confidence in their ability to navigate whatever comes their way. Speaking of challenges, I think it's important to take a closer look at the competitive landscape. What are your thoughts on the key players in the cybersecurity arena?
You're right. Understanding the competitive landscape is crucial. We've already talked about CrowdStrike, which is a major force in endpoint security. Known for their cloud-native platform and their focus on artificial intelligence, they've been very successful, particularly in the enterprise market. What are your thoughts on CrowdStrike as a competitor?
They're definitely a force to be reckoned with. But Palo Alto Networks also has some significant advantages. They're the global leader in cybersecurity. With a comprehensive suite of products and services, a strong presence in network security, cloud security, and security operations. Plus, they're making significant investments in AI and platformization, which could give them an edge in the long run. What about some of the other players?
We can't forget about established players like Cisco, Fortinet, and Check Point Software Technologies. Cisco is a giant in the networking world, and they've been expanding their cybersecurity offerings, leveraging their vast customer base and strong brand reputation. Fortinet is known for its focus on performance and cost effectiveness, making them a popular choice for budget-conscious organizations. And Check Point Software Technologies, a pioneer in firewall technology, have a long history of innovation and robust security capabilities. What are your impressions of this competitive landscape?
It's a tough field to play in, that's for sure. Palo Alto Networks is up against some formidable opponents, with deep pockets and proven track records. What do you think sets them apart?
Competition can be a double-edged sword. While it certainly presents challenges, it also drives innovation and forces companies to continuously improve. Palo Alto Networks seems to be embracing this challenge. They're investing in research and development, expanding their product portfolio, forging strategic partnerships, and pushing the boundaries of what's possible in cybersecurity. What do you find most compelling about their approach?
I like that they're not content to rest on their laurels. They're proactive and forward-thinking, which is essential in such a rapidly evolving industry. And speaking of evolution, I think it's important to take a step back and consider the bigger picture, the overall industry trends shaping the cybersecurity landscape. What trends do you see as most impactful?
You're spot on. The cybersecurity landscape is constantly evolving, and understanding the major trends is key to evaluating any company in this space. One of the most significant trends is the rapid adoption of cloud computing. It seems like every company is migrating their data and applications to the cloud, creating a whole new set of security challenges. What are your thoughts on this shift to the cloud?
It's a huge shift, and it's definitely introduced new complexities and risks. Now, companies are not just responsible for protecting their own networks, they also have to rely on cloud providers to secure their data and applications. This shared responsibility model creates new vulnerabilities and requires a different approach to security. How do you see this impacting Palo Alto Networks?
They've recognized this shift and have been investing heavily in cloud security solutions. They're partnering with major cloud providers like Amazon Web Services and Microsoft Azure to ensure their solutions are seamlessly integrated and provide comprehensive protection for cloud environments. This strategic positioning allows them to capitalize.
On the growth of the cloud market, what other trends do you see as significant?
Well, the increasing sophistication of cyber attacks is a major concern. We're seeing more targeted attacks, zero-day exploits, and advanced persistent threats. They're incredibly difficult to detect and prevent using traditional methods. It feels like a constant game of cat and mouse, with the attackers always trying to stay one step ahead. How can companies like Palo Alto Networks keep pace? You've hit on a critical point. The attackers are becoming more sophisticated, and traditional security measures are often inadequate. That's why we're seeing a surge in demand for AI-powered security solutions. AI can analyze vast amounts of data, identify patterns, and detect anomalies that might slip past human analysts, making it an invaluable tool in this fight. How do you view Palo Alto Networks' role in this AI-driven security evolution?
Well, from what we've discussed, they're clearly at the forefront of AI innovation in cybersecurity. They're integrating AI into their products and services and developing new solutions specifically designed to address the challenges of AI-powered attacks. It seems like they're well positioned to benefit from this growing trend. Are there any other trends you're keeping an eye on?
Absolutely. One trend that's gaining momentum is the growing awareness of cybersecurity risks among businesses of all sizes. It's no longer just large enterprises that are targets. Small and medium-sized businesses are also realizing they need to take cybersecurity seriously. This expanding customer base is creating a huge opportunity for companies like Palo Alto Networks, but it also puts pressure on them to offer solutions that cater to a wider range of needs and budgets. What do you think about this trend?
I think it's a positive development overall. The more businesses prioritize cybersecurity, the better off we'll all be. But it also means that companies like Palo Alto Networks need to be adaptable and offer solutions that are scalable and affordable for businesses of all sizes. What other trends are shaping the industry?
Data privacy is another critical trend. With regulations like GDPR and CCPA, companies face increasing pressure to protect their customers' personal information. A data breach can not only damage a company's reputation, but also lead to substantial fines and legal penalties. It's not just about preventing cyber attacks. It's also about ensuring compliance with data privacy regulations.
How do you see Palo Alto Networks addressing this growing concern?
Well, they've been incorporating data privacy features into their products and services, helping companies secure their data and manage it in a way that complies with relevant regulations. It's a crucial aspect of their offerings, especially as data privacy concerns continue to grow. What other trends should we be paying attention to?
The rise of the Internet of Things, or IoT, is creating a vast network of interconnected devices. From smart home appliances to industrial sensors, each connected device is a potential entry point for hackers, making IoT security a major concern. What are your thoughts on the challenges and opportunities presented by the IoT? It's a fascinating and rapidly evolving landscape. The sheer number of connected devices creates a massive attack surface, which is daunting. But it also presents a huge opportunity for cybersecurity companies like Palo Alto Networks to develop solutions specifically designed to secure IoT devices and networks. What's your take on Palo Alto Networks' approach to IoT security?
They're actively developing and deploying solutions to address the unique security challenges of the IoT, demonstrating their commitment to staying ahead of the curve. They're not just reacting to current threats, they're anticipating future ones. Now, let's shift gears and revisit Palo Alto Networks' financial performance in more detail. What aspects of their financials are you most interested in exploring further?
Well, we touched on their strong revenue growth earlier, but I'd like to delve deeper into their financials and understand what's driving their success and what potential challenges they might face. Where should we start?
Let's begin by examining their revenue trend over the past few years. What insights do you think we can gain from analyzing their revenue trajectory?
Looking at their revenue over time will give us a good sense of their overall growth pattern and whether it's sustainable. Consistent revenue growth is usually a good indicator of a healthy business. What does Palo Alto Networks' revenue trend look like?
Their revenue has been steadily climbing upward, which is encouraging. But what's even more impressive is that their revenue growth has been accelerating in recent quarters. As we discussed earlier, their latest quarterly report revealed a 14% year-over-year increase, a significant jump from the previous quarter's 12% growth. What do you make of this acceleration?
That's a positive sign. It suggests that their investments in key areas like AI, platformization, and cloud security are starting to pay off, and that their strategy is translating into tangible results. But revenue growth is only part of the story, right? What about their profitability?
You're absolutely right. Revenue is important. But ultimately, it's about how much profit a company generates. And in Palo Alto Networks' case, they've been consistently profitable for several years. What are your thoughts on their profitability track record?
Consistent profitability is always a good sign. It indicates that they have a sustainable business model and are generating profits from their operations, which is essential for long-term success. Have their profit margins been improving?
Yes. Their profitability has also been improving in recent quarters. They're not just growing their revenue, they're also becoming more efficient at generating profits, which is a very positive sign. What other financial aspects are you curious about?
Cash flow is often considered a more reliable indicator of financial health than net income, isn't it? What can you tell me about their cash flow?
You're right. Cash flow reflects the actual cash coming in and going out of the business, providing a clearer picture of their financial stability. And in Palo Alto Networks' case, their cash flow has been consistently strong, giving them the flexibility to invest in growth, acquire other companies, or return value to shareholders. How important do you think a strong cash flow is?
A strong cash flow is crucial. It gives a company options and allows them to weather economic downturns or seize growth opportunities without having to rely heavily on debt. What about their balance sheet? What insights can we gain from that?
Their balance sheet is another area of strength. They have low debt levels and a strong cash position, indicating that they're not overly leveraged and have the financial resources to navigate challenges and pursue growth opportunities. What are your thoughts on their overall financial health?
From what we've discussed, their financial picture looks very healthy. They have a solid track record of revenue growth, strong profitability, excellent cash flow, and a well-managed balance sheet, all of which create a firm foundation for future growth. But I'm curious, do they pay dividends?
Unfortunately, Palo Alto Networks does not currently pay dividends. What are your thoughts on that?
Well, it's not uncommon for high-growth tech companies to reinvest their earnings back into the business to fuel further growth, rather than paying dividends. It makes sense given their current stage of expansion, but it's something to consider for investors seeking income-generating stocks. What key takeaways can we glean from their overall financial performance?
Their financial performance is marked by several key strengths. They have a consistent and accelerating track record of revenue growth, driven by their strategic investments in AI, platformization, and cloud security. They're consistently profitable and becoming more efficient at generating profits. They have robust cash flow, providing financial flexibility, and a healthy balance sheet with low debt and a strong cash position. All of these factors suggest that they are in a strong financial position to navigate the challenges and seize the opportunities that lie ahead. What stands out to you the most?
I'm particularly impressed by their consistent growth and their ability to adapt and innovate in a rapidly changing industry. Their financial strength gives them the resources to invest in their future and stay ahead of the competition. But, as with any investment, it's essential to weigh the potential risks and rewards carefully and do thorough research before making any decisions. What other aspects of Palo Alto Networks should we explore?
We've covered a lot of ground, from their innovative use of AI to their impressive financial performance, from their competitive landscape to the overall industry trends. But one crucial area we haven't touched on yet is their stock split. Are you ready to dive into that?
Absolutely. The upcoming stock split has generated a lot of buzz, and I'm curious to understand its potential implications for investors. Let's delve into that in the next part of our deep dive. Welcome back to our deep dive into Palo Alto Networks. We spent the last two parts exploring their business, their financials, and the competitive landscape. And now I'm eager to circle back to that upcoming stock split. It's been generating a lot of buzz, and I know some people are wondering if it's a sign to buy.
It certainly captured people's attention. As you'll recall, they've announced a 2-for-1 stock split, effective December 16th, hot on the heels of their 3-for-1 split back in September 2022. And their stock price has more than doubled since then.
Right, which makes this new split all the more intriguing. But we talked earlier about how a stock split itself doesn't change the fundamental value of a company. It's like cutting a pizza into more slices. Same amount of pizza, just smaller pieces.
Exactly. However, it often creates this psychological impact. A lower share price can make the stock seem more attainable, particularly for individual investors. This can sometimes increase demand and drive the price up, at least in the short term.
So the real question is, can Palo Alto Networks sustain this momentum? Can they continue delivering strong growth and profitability to back up this market enthusiasm?
That's the million-dollar question. No one has a crystal ball. But there are several factors that suggest they're well-positioned for the future. They are the global leader in cybersecurity, with a comprehensive range of products and services, and they're at the forefront of AI innovation in cybersecurity, integrating AI into their solutions to address the increasingly complex threat landscape.
And let's not forget their strategic moves to capitalize on major industry trends like the shift to cloud computing and the rise of the Internet of Things. Plus, their financial performance has been exceptional, with consistent revenue growth, strong profitability, and a healthy balance sheet.
And they have a seasoned and capable management team at the helm, guiding their strategic direction. These factors combined paint a picture of a company that's not only keeping pace with the industry, but actively shaping it.
Of course, we can't ignore the risks. We've discussed the fierce competition, the rapid technological advancements, and the ever-changing regulatory landscape. All of these present ongoing challenges.
True, but Palo Alto Networks seems to be navigating these challenges effectively. They're adapting, innovating, and demonstrating a commitment to staying ahead of the curve. For investors looking for exposure to the cybersecurity market, Palo Alto Networks appears to be a compelling opportunity, despite the inherent risks.
It's been a fascinating deep dive. Exploring all these different facets of Palo Alto Networks, we've covered a lot of ground, from AI to financials, from competition to industry trends.
And we've touched on crucial aspects of investing, like risk assessment, valuation, and the importance of understanding the company's leadership team.
This deep dive has given us a lot to consider, but I think the most crucial takeaway is that this is just a starting point. The world of cybersecurity is constantly evolving, and it's an ongoing process to stay informed and up to date.
Absolutely. Now, as we wrap up, let's leave our listeners with a final thought to ponder. Imagine a future where AI is even more deeply integrated into our lives. How might that impact the cybersecurity landscape? Will AI become the ultimate defense against cyber attacks? Or will it create new vulnerabilities that we haven't even imagined yet?
It's a fascinating question, and one that's sure to shape the future of cybersecurity, and companies like Palo Alto Networks who are leading the charge. Thanks for joining us on this deep dive into Palo Alto Networks. We hope you found it informative and thought-provoking.
And as always, stay curious, stay informed, and stay secure.